On paper, it looks like the greatest business on earth. Millions of people walk through your doors every year, and almost none of them have a choice. They can't leave. They can't shop somewhere else. They're trapped for hours, wallets open, waiting for a flight. A single bottle of water can sell for $4. A cramped lounge chair rents for the price of a hotel room. It feels like a monopoly disguised as public infrastructure. But that's only the beginning. The real story starts after that. That's where the economics become interesting. Here's what most people completely miss. An airport doesn't make its money from planes. It barely touches the runway business at all. The real profit engine sits somewhere else entirely, and almost nobody thinks about it until they're standing in the middle of it, holding a boarding pass. Airports actually operate two separate businesses stitched together. The first is called the aeronautical side. This covers landing fees, gate charges, and fees airlines pay just to park their planes. It sounds like a gold mine. It isn't. Regulators around the world cap these charges because they don't want airports gouging airlines and passengers. At many major airports, these fees barely cover the cost of maintaining runways, taxiways, and security checkpoints. Then there's the second business, the one that actually pays the bills. It's called the non-aeronautical side, and it's where airports quietly turn themselves into shopping malls with a runway attached. Retail, restaurants, parking, advertising, lounges, duty-free, shops selling perfume and whiskey at markups most retailers would envy. This is where the real profit hides. Take Dubai International Airport. It's one of the busiest airports on the planet, and a huge share of its non-aeronautical revenue comes from retail and duty-free sales alone, according to Dubai Duty Free's own reported figures. Passengers spend hours waiting, bored, anxious, and often flush with cash from a trip they've been saving for all year. Airports know this. Every design decision, from where the gates sit to how far you walk past the shops, is engineered around that psychology. That sounds profitable. Until you see the costs. Building an airport is one of the most capital-intensive projects in the world. A major international airport can cost anywhere from several billion to over $10 billion to construct, depending on runway count, terminal size, and technology. Beijing Daxing International Airport, opened in 2019, cost roughly $17 billion to build. That's before a single passenger checks a bag. This is where almost everyone gets it wrong. They assume airports are privately owned businesses, like a chain of gas stations. In most countries, that's false. Airports are usually owned by governments, cities, or public authorities, then leased or contracted out to private companies to operate the terminals, retail spaces, and services. Heathrow Airport in London is a rare example of near-full private ownership, controlled by a group of institutional investors including sovereign wealth funds. Even then, its charges are tightly regulated by the UK's Civil Aviation Authority. And this changes everything. Because if you can't freely set your own prices, your profit doesn't come from charging more. It comes from controlling costs and squeezing every possible dollar out of the space you already have. Fixed costs are enormous. Runway maintenance, air traffic control coordination, security staffing, fire services, baggage systems, and insurance never stop, even when planes don't fly. Variable costs shift with passenger volume, fuel handling, cleaning, staffing shifts, and utility use. During the 2020 pandemic, global passenger traffic collapsed by more than 60% according to the International Air Transport Association. Airports still had to pay for runway lighting, security, and debt service, even as terminals sat nearly empty. Many airports took on emergency loans just to survive. Debt is the quiet backbone of this industry. Most large airports are financed through decades-long bonds, some stretching 30 years or more. This means an airport opening today is often still paying off construction debt from a decade ago, long before it turns a real profit. On paper, it looks brilliant. Reality is different. Look at Berlin-Brandenburg Airport. It was supposed to open in 2011. Instead, it became one of Europe's most infamous infrastructure failures, delayed for nearly a decade due to fire safety system failures and mismanagement, ballooning in cost from roughly €2 billion to well over $7 billion. By the time it finally opened in 2020, the pandemic had gutted air travel demand. Compare that to Singapore's Changi Airport, consistently ranked among the world's best. Changi didn't just build gates. It built an experience, including an indoor waterfall and a butterfly garden, turning the airport itself into a destination. That strategy pulls in retail spending from passengers who'd otherwise just sit and wait. Here's an interesting fact most travelers never consider. Many airports make more money per square foot from parking and rental car services than from luxury retail. Parking has almost no marginal cost once the structure is built, which makes it one of the highest margin businesses inside the entire airport ecosystem. The future of this industry is shifting again. Airports are investing heavily in biometric security, automated check-in, and data-driven retail, tracking passenger flow to place stores exactly where foot traffic peaks. Some airports now generate meaningful revenue simply from advertising space and digital screens, treating every hallway like prime real estate. So is owning an airport actually worth it? The airlines that use it rarely profit from it directly. Governments often build airports to drive economic growth, tourism, and trade, not immediate returns. Investors who profit are usually the ones controlling long-term leases on retail, parking, and non-aeronautical operations, not the runways themselves. The ones who fail are the ones who assume passenger volume alone equals profit, ignoring debt, regulation, and decades-long payback periods. The next time you walk through an airport, remember this: you are not just waiting for a flight. You're standing inside one of the most complex economic machines ever built. One where every shop, every gate, and every parking space is quietly engineered to turn your boredom into someone else's profit.